Well, jet setters. It's unfolded as I saw it coming. The videos early in the week and a couple of weeks ago. So a couple of weeks ago, you might remember I looked at. You look back at it. It's a couple of weeks ago. There's a video titled "Short-Term Topping Pattern," and it looked at this little point here, where we'd starting to see some touch and negative divergence, like on the weeklies. We'd also seen some action outside the Bollinger Bands, right? The weeklies, quite rare. There was a few other signals, right? And I said, look, that, and also the top of this channel, of course, right? And said it's gonna, good chance it's gonna come back. If it does, it's gonna come back to this level here, which is that high. And that's exactly where it has come back to, and it looks like it might go further. So that was a couple of weeks ago when I talked about this thing. This was on the weekly outside the Bollinger. At the time, I also talked about how it formed. When you look at topping patterns, you've got to see there's got to be something in there on a shorter time frame, which is a topping style pattern, and this was it. This little diagonal here. Broke down, came back, had another short, broke down again, and it's following this trend line on the way down to there. It's a little bit oversold, but it still could have more to go. As you can see here, this was back on those ones. I've called these ones as well, around the 16th and 17th of September. That was on the back of that pattern that had happened like 5 months in a row there, which was the couple of days leading up to the 19th and 19th there. It's the 18th and the 19th. The 9th was a weekend. Here, same thing. And the 9th here, same thing. Same calendar date, not options related. 1, 2, 3, 4, and then here again, same thing, and it followed through. It stopped happening. Really weird. Exactly 1, 2, 3, 4, 5, exactly on the same calendar date. A couple of trading days followed by when the seller disappears, recovery. Hasn't happened again since then. Interesting. Don't know. One of those life's little mysteries. So this one I've been short, but I did stop out. Unfortunately, I just got trading the US market. It's tiring. You've got to be up in the wee hours of the morning to watch it. And I just basically got fed up, so I squared up on one of these rallies, and then when it sold off just the other night, I was having a night off, missed it, which was a bit of a bugger. Been short the Aussie equity risk though, of course. So it's kind of reached the target that I had in mind. You can see it's done this little kind of turn and go. Right, you can see it pretty clearly on the lines. What about the shorter time frame? Yeah, I mean, it really, that looks quite bearish, like it could have another dump now that it's closed underneath this line. So this support line, it was quite a key one, right? Where it hit that high, came back, retested it, did the turn and go, and up. Now on the way back down, it didn't spend much time resisting or supporting it, came through. Resistance, now it's come back. It could easily have a leg down, another leg down. I reckon that could be interesting. So that's the US equities. So they've reached my target, still to go shorter. Difficult time to open a position though. I'm sitting on the sidelines for this for the moment. One interesting thing though is when you look at the Nasdaq, there's a few different Nasdaq indices to choose from. This one I look at. You can see how it has broken through more clearly that same support line, and it has dropped like a stone right through it. Some of these orange lines here, they're like some of the negative divergence which you see on the Nasdaq. Higher highs, weakening RSI here, high highs, weakening RSI, big cursors to big, precursors to big corrections. And this one, there wasn't really any of that negative divergence. Here there is. So I think the next target here is around about that 14,000 level, which, what kind of percent is that? Oh yeah, 7%, pretty big move. That'd make it 10 all up, 12, yeah, that's about right. That's on the cards. It really is on the cards. It's also on the cards because of where the US yields are moving. The 2 yields are on the move. This is a chart I haven't, it's on a line basis. That's the roll. You get a bit of noise in there. Let's look at this. Right? This is something I dropped. I had this in like a previous video. You can see how the price, right? How it's really rolled over, and there's this big gap here where it kind of had a bit of a pause. And let's see if it makes it clearer there. Yeah, there was a bit of a pause there. That's where the line is. There's this massive gap here. And look, this is a little bit of exaggerated because of the roll, like the contract just rolled. So it shows up a bit more dramatically than what it actually is. But there is still this big gap to be filled. That is going to happen, right? I reckon this is the easiest, dumbest money to be had around selling the 2-year futures and just like rolling them. They're going to go down. They're going to take the Nasdaq with it, which will hurt the S&P, and also it's going to take gold with it, right? So I've been short these as well. So I've been short equity risk, that's been paying off. Been short the 2-year bonds, that's been paying off. Gold, I was in and out of. I don't have anything in gold at the moment. But of course, I mean, this is so funny, right? It just broke this level here, this 1830 level, right? Look at the scheme of things, right? It broke this little level here, right? Everyone said, oh, it's off, it's off, it's off. And I remember posting a few videos saying, look, I'm skeptical because a lot of people are looking at kind of this trend line, which really, I mean, it kind of looked good, okay at the time, right? Because I guess you could say something like that, right? But you can draw these things wherever you want to a large extent. But of course, this is on the weekly, right? And gold, I'm convinced with gold, you've got to look at it on a longer time frame. If you look at it on the short-term time frame, it's too volatile, too choppy. It's a big macro thing. You've really got to look at it on a longer-term basis. Gold, with 2-year yields going, it's going down, right? It is going down. People say it's going up because of inflation. It went up here because of the inflation that we've now got here. That was the smart investors. They look here, they say yields are going up, which they were, right? Oh, yields are going down, which they were. The yields hit a low, gold hit a high, and everyone said, well, that's going to cause inflation. But the good investors could see it coming, right? The dumb investors thinking about inflation now, they're idiots, bona fide idiots. And I'm convinced that this is going to be one of the most beautiful topping patterns, Twin Peaks, that we've seen in living memory, right? I'm convinced that gold is going here, right? Maybe not all the way down, right? But that's what's going to happen. It's going to be this beautiful, they'll call it the volcano, something like that. Some people say, look, it's going up to like God knows where, right? Why would gold go up that high? This peak and that peak, they correspond on the dot, right? August 2011 and July 2020 with the record lows in the US 2-year treasuries, right? So unless we're going to see, here, right? That's it. There we go. So in there, that's like August 2011, right? See there where it picked the thing, August 2011. And then again here, the peak here, which is like down here, which is like, July, August 2020, right? These yields, they hit a record low, right? Gold hits a record high, they come back up, gold has another run up. Where are these yields going, right? these yields are going up, right? They're going back to this trend line. They're certainly going to retest here. They're going back up to the trend line. That is going to be bad for gold. So that's US equities. That's gold. Let's look at the Australian equities quickly. I've been short Australian equity risk. I think all up I've made about like 400 points, like on trading it from the top. Not as much as I wanted to, right? But I guess the top is 75.50. We're at 72, 100. So there's 300 points there. So I've outperformed, but I haven't made as much in the choppiness as I would have liked. And I gave a bit back here, right? So it's a bit frustrating, but I'm still ahead. Can't complain too much. At least it's a positive number. The Australian market, it's come back to exactly where I suspected it would, right? Which is that pre-COVID high, and it came back. Resistance there, support, and it came back and it touched it overnight. Really frustrating overnight, actually. I'll tell you what happened. It's very easy with technical analysis to say, look, it breaks through this trend line, sell it. Okay, that's great, right? But I had been selling it in here, right? And I'm kind of waiting. And then when it breaks, that's fine. You can write it down. Then it's like, when do you buy it back, right? And I think I bought it back at 7,200, right? Still had a bit more to go. Picked up some on the way back, right? But then when it starts getting into the old fade the rallies, a lot of people talk about fading the rallies. That's so easy on paper. You try and do it in practice, right? You try and do it in practice. It is not easy, right? This was a classic Fibbo, A, B, C on the nut, right? And you look at it and say, oh yeah, total, it's going to come back, sell it up here, right? Great. So what I did, I had a go at selling it like in here, and it rallied further, so stopped out, came back here, waited, sold it about here, right? Didn't stop out, rode it back down, but I bought it back around about here because this was on the close, in the month-end close in Australia, and it looked like there were silly buggers going on. It wasn't actually. It turned out not silly buggers on the close. It turned out to be news about some Omicron kind of news, and it just shot through, right? So then I re-shorted it, but I re-shorted at a shit level at 72.12, right? Saw it kept going, no worries. Then it came back up, rode it all the way back up here, stopped out. Right up here at 72.60, pain in the ass. I gave up. So I made it here, right? Lost a little bit here, made it here, but not all the way. Gave back a fair bit here, right? And then stopped out here because this was the night when I said, mate, that's it. I'm tired. I was just like wasted, and went to bed and it was here, and it looked like it could be going, up, right? Because it had done a bit of a formed a bit of a bottom here. It didn't look like it was going to break that night. It looked like it was coming back to retest this range, right? The old low, high, higher, low, looked back potentially high. Didn't do that. Turned around in the wee hours of the morning, wake up in the morning, and it's like down here. Anyway, so I've re-shorted it, and I re-shorted it here at 72.30, which I think is a pretty good level. And that's based on this trend line here. I'm still a bit concerned about the following. This, right? That's the 4 hourly, right? So you do have strengthening RSI there, but a lower low. Bit of a washout, not a convincing one. So I'm still a bit wary that on the RSIs, this is not a great buying level, right? But that's the trend at the moment, and I'm on it again, so that's good. This also goes to the next thing I want to talk about, which is this has been trading the equity market. And you look at the equity market, this is the daily one, right? It's kind of choppy and it's volatile. Even when it's trending up, right? There's a lot of choppiness in there, right? You do get these like spurts, but then there's a lot of chop. They're difficult, right? Let me show you the currency. I love trading the currency. Right? It is a lot easier, I think, than the equity markets. You know, this is a head and shoulders pattern that I called. Head and shoulders, left shoulder, head, right shoulder, weakening momentum, right? And came back tested, and I said, that's it, sell it, right? So I've been selling it on the way down, squared up in here because it was overbought, did some more trading in here, solid again here, rode this trend line pretty much all the way down. And you just look at this, it's just beautiful. It's just a trader's dream, the way it's kind of stepped down. Like for me, this is where I shorted it up here, 75.50-ish, because it had this, it shows up more clearly on the daily, the divergence, the weakening momentum, slightly higher high, and it hit this trend line, right? You can see it on the dailies. It hit that trend line, really clear trend channel, right? You can just see here that slight negative divergence, very slight, but it shows up on the shorter time frames, right? So there's a great technical level to get in on, and then you can see how it's just stepped down, and it kind of hit a low here, comes back, breaks through it, hits a new low, retests the old low, right? Comes down, hits a new low, retests the old low, breaks through, sets a new low, retests the old low, comes back, hits a new low, retests the old low, hits a new low, retests the old low, right? Hits a new low, retests the old low, right? Comes back, new low, retests it here, hits a new low, retests the old low. This is beautiful, right? Been really nice to trade. Just stepped down, beautiful. And you look at that, right? So that's from, November. That's basically all through November, right? Let's look at what the equities did during November. Look at that. I mean, it's a pain in the ass. Let's look at the US market during November. There you go. Yeah, it's a pain in the ass. It's up and down. To trade that, you do end up inevitably getting stopped in and out, all the time, unless you just got big owners, right? You just say that's it and you kind of wear it. But you can be wearing some pretty big losses till it comes good, right? Whereas the currency, it's not as volatile. The margins for the futures are smaller, the initial margins. And it's from when you're in Australia, you earn money in US dollars. It's the real currency. So it's pretty good. So that's one thing. So I'm still short in the Aussie, and it's done this really nice megaphone pattern there. I was a bit nervous here, right, about it breaking above this long-term trend line, right? I was, because I short at 71.49 or 45, I think it was, 71.45, and which was around here, okay. And it broke up, then came down, stayed in it, came back up, and I thought, well, I looked at this one and said, look, I think it's doing one of these, it's going to come back down. Anyway, it's come back down, and it's having a really good fight around 71 cents. This is going to be a telling level for the currency, right? Because, well, I'll put it this way, it's a really good Fibbo from, let's go back on the dailies. So right bang on the Fibbo, 71.20, whereas at the moment 70.95, so within, right on it. So there's that Fibbo that it's testing. There's also this previous low here that it's looking like it might crack. Oh, it's already cracked it. And then there's this trend line here, a bit messy because of this washout. But I'm just watching it carefully, because if it breaks this level, this is the target I've had in mind, 70.26. That's where I think it's going. If it does break it, look at all that fresh air. There's a lot of fresh air, right? It could quite easily have a stab back up here, probably to around there. 73 cents, I'd say, would be the level. Let me just draw that in. That one. That, I'm going to make that a red line. If it comes back, that's where I suspect it'll come back to, and that does look remarkably like a 50% retracement. Let me just check that one. Very close at the moment, yeah. So that's what I'm looking for there, and that would be the way this doing a bit of a megaphone pattern here as well, isn't it? So I'm going to watch it carefully if and when it breaks this trend, which it will. The dailies, it's looking oversold. It's getting close. It could have a little washout down here, like what happened here. But I do think it's going to have a go at touching it just under here, and it might rebound quite strongly from there, coming up to a critical level. Yeah, but it's been a good one to trade. Look, that's pretty much it for just the last thing, the Nasdaq. Look, the Nasdaq did not before. Yeah, it's looking very vulnerable. And the other thing on the Nasdaq is, look at this. You don't see these very often. We've got a gravestone. For all the Japanese candlestick readers, we've got a gravestone, right? I've always been a bit bothered by this engulfing bearish candle, that these ones, historically, they really do have ramifications that kind of last for a few months. Like you can see this one here, right? There's a big engulfing bearish candles, right? It came back very strongly the next month. It could be a suckers one. This, well, it depends on what goes with this month here, of course. State the obvious. But these gravestones, they're turning points. That's a bearish signal. So we've got a big bearish signal, but that's an engulfing bullish. Right? Now we've got another bearish one, real battle kind of shaping up there. That is quite telling, and I think that combined with it turning in the yields, that could wreak havoc. That's the thing to watch. And the last thing I'm going to look at, this is a bit out of the box. I used to run an emerging markets business. Great business. I was based in Miami, Florida, actually. I had a team in London, New York, and obviously the team in Miami. And we traded emerging markets, debt, currencies, structured equity products. This is the currency, right? Now, one of the things we did in emerging markets is we traded a lot of bonds, did a lot of finance like repos, and so the risk was always defaults, sovereign defaults, corporate defaults, and so I spent a lot of time studying the factors behind them. Now, one of the biggest leading indicators for a sovereign default is a currency crisis or a rapid currency devaluation, and generally they look at 40%, right? We've had 40% like in the past month, right? Very strong leading indicator. It's like when I say very strong, it's like it's 30% of countries that have this happen then default, right? It's a big percentage, right? It's not 100%, but 30% is a big one. Another leading indicator is actually the sudden resignation of a finance minister, which happened today. Another leading indicator is inflation. Turkey's inflation is above 20%. Right? That is above that's above the critical levels. The various studies have shown for factors leading to defaults. Another one is the lack of foreign currency reserves, and Turkey has burned through them trying to defend the Lira. They've been selling their dollars to try and manage this, and they've run out. I think they've got like 10 billion left, which is not enough. For a country of Turkey's size, it's basically zero. They've got dollar debt due. If they don't have the foreign currency reserves to pay it, then they're in trouble, because when this happens, for them to buy back the dollars to pay their coupons on their bonds, let alone the actual principal, they're in massive trouble, right? So, people talk about the chart of Bitcoin. Like, forget Bitcoin, right? This is serious, right? Turkey is a lot bigger than Bitcoin. Well, I think it is. But it probably isn't actually. Bitcoin's like $1 trillion. Turkey's got, I don't know what Turkey's got in terms of debt, probably doesn't have $1 trillion, right? But this is serious, right? Because this will, a lot of European banks will be holding Turkish dollar denominated debt, and if it goes, that will trigger a lot of unhappiness. So just keep an eye on Turkey as the canary in the coal mine, because this is a bad sign and a leading indicator for a sovereign default. And a sovereign default at the moment would certainly be one of those, I wouldn't call it, I guess I'll call it maybe not a black swan, maybe a grey swan, but it could well and truly put an end to some of the stupidity that we've seen in, in the equity markets. I mean, that is like, they're astronomical levels, right? This is obviously on a log scale, right? So it exaggerates it, or not on a linear scale, so it exaggerates it. But this is not going to end well. It's going to take a trigger. The trigger is going to be outside of COVID because the world kind of knows about it. The trigger could be something like a Turkish sovereign default. Bit out there. Anyway, so I'm still short equity risk, still short the bonds, still short the Aussie. Been staying out of gold and oil and the others for now. Have a look back at my videos. I'm pretty happy with some of the big macro calls I've been making. Been picking them like a nose. I'm not quite sure what's in store for us yet, but this is looking weak. Okay, catch you later.